GM, GM. Daily levels. Today is the 1st of March. GM, everyone. Here we go. So, new month. Bitcoin, I guess, as is customary. Now, I will do monthly preview today as well. So, I'll not go over too much of the monthly stuff. We'll do that on the monthly preview. But, what a monthly close by BTC. And as is the norm, and has been, we're pumping off the monthly open. This has been a very, very, very consistent pattern throughout the market. Where you go the 1st of February, here, there you go, green day on the 1st of February, never went lower. We had the 1st of January, green day, straight up, flush down, but started off with 2 days of pump. December, 1st of December, we pumped straight away, never went lower. November, where's November's one? Here, pumped on the 1st of November, never went lower, never made a new low. And October, pumped on the 1st of October, made a slight lower, and then up only. So, the market keeps front-running bullish months, basically because, at least for stuff like the start of the quarter or the start of the year, like on January that we had, and even stuff like December going into the end of the year, traders look at it on the 1st of the month and thinks, well, where's the market going to go next? Right? Is the market more likely to go up over this next 30 days or whatever, or down? And if they think it's going to go up, they get long. And then in general, there's just an overwhelming amount of demand for Bitcoin. I'd say overwhelming, I mean it. Even with absolutely fucking enormous GBDC outflows yesterday of 600 million, they were replaced by BlackRock, IBIT. Now, I think the vast majority of this has probably flowed into BlackRock. I don't think that 600 million has been dumped out of GBDC into dollars. I think that they have redeemed from GBDC or gotten out of GBDC to go into IBIT because of the fee switch. And I don't know all the ins and outs and the mechanics of ETFs, but as Bitcoin's price goes up, I feel like people don't want to be paying the GBDC fee, which is 1.5%. And maybe when it was like the reason why you might see Grayscale selling increase, but actually it just flows into other ETFs. The reason you might see that more now is because when the ETFs launched, everyone's like, oh, we'll see how it goes. There's no rush to sell. Bitcoin's at 48. Okay, now it's at 44. Okay, now it's at 40. Okay, now it's at 38. Yeah, fine. Right? There's no stress on it when it's not just mooning. And then it just starts to go up. And so it's a percentage. If you hold in GBDC, you pay 1.5%. Right? You pay 1.5% management fee. I don't know if that's based on dollars or based on Bitcoin, but either way is bad. Right? If they're going to take 1.5% off your Bitcoin holdings every year, well, that means a lot when Bitcoin is 100K, doesn't it? More so than when it's 50K. And if they take 1.5% off your dollars, it's still bad. So I think that as Bitcoin starts to ramp up and goes towards all-time highs, people are looking at this and saying, wait a minute, we're fucking paying this fee to stay in this shitty fucking wrapper of GBDC. We need to get out. That's just my theory, I guess. Because most people were going to leave Grayscale anyway. It's just too expensive. If you're going to hold long-term, it's just too expensive, 1.5%. And they move over to BlackRock, which is obviously the biggest, the most trusted. You know, everyone knows BlackRock, and it's like 0.25%, so significantly cheaper. So as long as we keep seeing stuff like this, where every single day this week, and for every day since the 21st. So for the last full week, just BlackRock alone has outpaced Grayscale. So anyone exiting Grayscale, I'm guessing most of that's just moving into BlackRock at this point. I think the people who needed to dump, right, the liquidators, FTX estate, Genesis creditors. Who else was there? There was a bunch. I think Celsius. There was a few. There's a few other bankrupted lenders that had GBTC shares. I think all that got dumped within the first few weeks, and now it's probably people just leaving Grayscale to move elsewhere. Or, of course, there's always going to be some people who are just selling, but the net flows are still positive, even with an enormous Grayscale. I think this is the most bullish day we've had. So in raw terms, the totals here, like 500 million, 576, 600, almost 700. You might think these are more bullish, but to have a 600 million, Grayscale's outflow was bigger than almost any net inflow of any day. And we still had a positive day, 92 million, because so much got swept up by BlackRock. So BlackRock are just fucking smashing Fidelity, especially because Fidelity are a massive asset manager as well. The BlackRock, whatever it's the marketing team, they're pushing it, whatever they're doing, it's really fucking, it's really in full swing. Because you can see the flows. And where's the total? Here's the total. Total for IBIT. Plus 4.8 billion, 4.9 billion. And Fidelity is 2.8. That was much closer. Like for the first couple of weeks, they were almost neck and neck, with BlackRock always slightly in the lead. But BlackRock have now almost doubled. They've almost doubled Fidelity. They've 2 billion more assets. So, yeah, big. Long may it continue. Now, Bitcoin's looking pretty good here. Would need to see it starting to get back up towards this, where this alert is set. If I start to see it, I want to see it push up into the highs. Here we go. Oh yeah, I was talking last night on the 15-minute chart. I guess we'll look at that. I'll try to keep this low time frame because we're a monthly preview will be coming up today. So I was talking about this W bottom forming on BTC with a key reclaim of the 50. And it was down here where we come into the low, bounced up, back down, going for a W where it reverses back up. So we ended up doing just one more push, one more retest. We're getting back up there, climbing back above the 50 on the 15-minute. Obviously, this is still just a consolidation. This breakdown has been avoided. Is it going to just fucking moon from here? Don't know. That would be like the ideal path. This is still like a move down and a corrective sideways, so there's still work to be done. This isn't necessarily bullish yet. I'll be watching very closely what happens when it takes this liquidity. If it touches that and drops back below the 50, that's where you could see a sweep out of those lows. But with that being said, these are just paths. You know, price can go in a bunch of different directions. The main thing to really focus on for me is this. You had your liquidation flush, came all the way down. This got stopped by genuine demand. We've talked about this. Like whenever a nuke gets stopped, there's real demand there. Came back for a retest, as it tends to do, held. Then we held at the 50. And this is the higher low that I want to really watch. It's in line with the 60K level before we broke out, came back, retested. So that's like a really elaborate under-over. Right? If you see like there's a support level, broke up, showed some strength, flushed through it, but just a sweep, and retested and held. Came up, retest the highs, sold off during the New York session yesterday. So that was, remember, we know now there was 600 million of Grayscale selling. But as the selling was coming down and as the market makers were hedging it or whatever they're doing, because they don't actually buy and sell it. The shares get bought and sold, but the actual Bitcoin, it doesn't get settled till the end of the day, I believe. So, or is it T+1? Maybe it's the following day. But anyway, as the flows are happening, the market makers and the authorized participants, they know that there's massive selling from Grayscale. They know this, right? So they're hedging on perps, or they're selling preemptively, or they're buying, whatever. They're finding ways to remain delta neutral within their accumulation or distribution of the Bitcoin, underlying Bitcoin. And from Wednesday during the New York session will be the big flush. Thursday we tried to go down as well, but it held, right? And it held up much better, formed a nice solid higher low for now. And that is Bitcoin back to doing what Bitcoin does. Over here, same thing. We had a flush out, rallied up, came in, higher low, higher low, higher low. So as you can see, the importance of the 15-minute 50 EMA here. Something similar, if Bitcoin starts to hug that, I think will lead to at least an attempt to break out today. Whether it does break out, I don't know. That would probably depend. If we get a big, let's say grayscale selling decreases and BlackRock has another big day, I think we could have an attempt for a breakout. As for the chart itself, when you have a trend week, like I said, you get Monday, Tuesday, Wednesday, all green. Then you get a red day. Typically, Thursday, if it's red, Friday can also be red. And if it's not, that's really bullish. One of the most bullish things you'll see is a rally with one red day and then the next day is green, especially now if it closes above yesterday's high. So if you follow up a three red, it doesn't have to be three, but if you follow up a rally with one red day and then another green day that breaks higher, that's just a consolidation. That's not the start of a downtrend or a shakeout or a flush, a deeper flush. That's just a bullish consolidation that got bought up. It is the start of the month, right? So we barely have any lower wick on the monthly candle. But as you've seen from the previous months, that's kind of the trend. That was all the lower wick we had on February. So we'll see how it goes from there. But yeah, when it's rallying up and you get that one dip and then it gets bought up again, that's typically quite a bullish sign. So we'll see. We'll see how it's going. There's an example over here as well, right? Pumped off the lows during the banking crisis, one red day, and then boom, away we go, new highs. Pretty common pattern to have that just that one day where people start to sell or get shaken out or panic and start to flip their bias, and then it just takes off again. So we'll see. I'll take a look at some of the lower time frame data. Obviously, funding rates are high. They have been high. They remain high. They're elevated. That is always fine if price is going up. So it all depends on price. If you look at the altcoins, same kind of thing. We had a really nice flush out of leverage, right? Now, altcoins particularly have kind of reloaded that, right? They flushed out, 16.3 down to 14. 2.3 billion got wiped. It added right back up to 16.6 again, back down to 15. So another 1.6 got wiped yesterday, and it's starting to build back up. The funding rates from being elevated dropped down with the flush, pushed up again, declining now. I'd like to see them go lower, but for relative rate of change where we're at now, it's kind of par for the course where we've been on this rally. Bitcoin, big flush out, reloaded, second dip. Seems like accumulation on Bitcoin from